All right, officially, good evening and welcome everybody to tonight's webinar where we'll be doing market analysis using the Elliot wave theory. My name is Victor Manena. Most of you have seen my charts. I usually use the Elliot wave method to analyze the charts. So as I've said the last time, this is not an educational webinar. It is a market analysis webinar. So I do not necessarily go into the education or the theory itself. So I just do the application and just show you what I'm looking at when I look at the market. So last week we looked at the Euro-New Zealand trade. We'll look at it again. But before I get started, I saw that most of you liked the video that we did last week, the webinar that we did last week. But it looks like some people are getting misled. You think just watching a video will make you understand Elliot wave. So what I'm going to do is, even if I'm not going to necessarily go through into the details of the education, I'm just going to give you a few tips of how to apply this Elliot wave. So Elliot wave is about patterns and structures. All right, so I'm going to just quickly share a few patterns. I know a lot of people have read the theory, the summaries that you usually get about the Elliot wave. So it is very easy to understand, but I think the challenge for most people is the interpretation, what the theory is actually saying, because I see it on the charts that people send me asking for opinions, because they are most of them are totally way out. And dare I say ridiculous. It looks like a person just wants to do the count. So I posted a status on Facebook today saying, Elliot wave is not about the count. It's not about the wave count. It's about identifying the patterns. It's about identifying the patterns and trying to trade these patterns. So the important patterns that I'm just going to quickly share with you guys is the corrective patterns. And these corrective patterns are all over the charts whenever we do the analysis. So here's what I'm going to do quickly. Maybe for the next 5 to 10 minutes, I'm just going to do this quickly. But you can go and read this in your Elliot wave documents. So we've got different types of corrections. So normally what I always say is you always get a correction. You always get an impulse wave or an actionary wave, and then you get a correction, right? And then after the correction, the impulse continues again, okay? So I'm gonna share with you about 5 corrective structures that that are very common in the Elliot wave theory. And I'm sure most of you have read these structures, okay? Let's clear that. So the first corrective structure I'm going to share with you guys is a zigzag. It's a simple zigzag that everybody knows. Right. So what happens is you get a correction. You get an impulse, and then after the impulse, you get a zigzag. Simple as that. All right, guys, I think I was disconnected. I'm back on now. Let's carry on what I was saying. I'm going to share with you about 3 or 4, 5 corrective structures that you should always look for. There's somebody who's talking. I just want to find out who that person is. Got them, and I've muted them. Everybody is muted now, so we should not have feed breaks. Right. So this is what I was saying. 3 corrective structures that I'm going to share with you guys. Right. First of all, you always get an impulse. And then after the impulse, you get a correction. This is your impulse. This is your correction. So this one is your A, B, C correction. So this is what we call a zigzag, right? This is a zigzag correction. That is the first structure I'm sharing with you guys. This is the simplest one you can find. So you will normally get a 1, 2, 3, 4, 5. And then after that, you get an A, B, C. So that is the most basic correction you can ever find. That is a zigzag. So a zigzag has got a couple of rules. And I'm not going to go into the details of the zigzag rules, but it normally retraces from A, it normally retraces to about the 50% area. if this is wave 5, it always retraces to about 50 to 61% or even 78% sometimes. So that is the zigzags. So the next one is a flat correction. And there are different types of these ones. The reason why I'm sharing this is because you're going to find a lot of these patterns in the chart. So when I identify them, I want you guys to understand where they come from. All right, so that's the zigzag. So you must remember the rules of a zigzag. So this A is usually equals to, this wave A is usually equals to wave C on a zigzag. Okay, let's clear that. Right, so now we're going to look at the flat correction. So as always, you're always going to get the impulse, right? So now you're going to get this A, then you're going to get this B, C. Right, so let me just draw the zigzag again for you guys so you can see the difference between a flat and a zigzag. So this is your A, B, C. Your A is equals to your C. And the subdivisions on a zigzag, you've got 1, 2, 3, 4, 5. You've got 1, 2, 3, 4, 5. So this is 5 subdivisions, and 3 subdivisions. That is a zigzag. So the difference between a zigzag and a flat correction is that your flat correction has got 1, 2, 3 waves. 1, 2, 3. So your A has got 3 waves instead of 5, as you'll find on a zigzag. And your B still has 3, regardless of whether it's a zigzag or a flat correction. And then you've got 1, 2, 3, 4, 5 on your wave C. So this flat has a specific name. You can see that this flat, this B wave retraces to about the same level as where A starts. And then this wave C sort of just passes wave A a little bit. So this flat is called a regular. This is what we call a regular flat. It does not break this top. Just remember, the regular flat does not break this maximum, not this the extreme of the impulse. It does not break this, and the rule is that it should retrace at least 90% of this swing. Yeah. Okay, so that is a flat correction. And why is it called a flat correction? Why is it called a flat? So people don't, I mean, you must ask yourself these questions. There's reasons why these things are called the way they are. All right, so a flat is simply that, you know, it's a flat. What does that mean? We're relative to this impulse, this is flat. It's going sideways. Can you see it's going sideways? This correction is going sideways. But the zigzag, as you can see, it's going down. This one is going sideways, and it just does not really break the A that much. And with the zigzag, actually, I didn't draw it properly. It should have been something like this. Let's do proper drawing here, like we went to school. A zigzag should have been something like this. It is well defined and actionary, almost, even if it's a connective structure. But a flat just goes sideways. You see the A, and then the B almost retraces to the extreme of the original impulse. But with the zigzag, it only retraces about 50%. This one retraces almost 100%. But with the regular one, it does not break. I hope you understand that. And then we're going to look at the 2 more corrections. We're going to look at 2 more corrections. So I've discussed the regular flat, right? So that was the regular flat that we discussed. So the same thing again. So we've got the impulse. So let's say this is wave 5 for argument's sake, right? So we're always going to get the A wave, right? Remember, the regular flat does not break the top, but this one now actually breaks the top, and then we get our B above the original swing, and then it goes and breaks the A. Okay, and the rules is still the same. You got 3 waves here, you got 3 waves there, and then you still have 1, 2, 3, 4, 5 on your C. It is still a flat correction with an expanded wave C and an expanded wave B. We call this one an expanded flat. It's a flat, but it's expanded a bit, it's expanded a bit. That's what it means. It's a flat, it's expanded, it's expanded. That's what it means. You should always ask yourself why these patterns are given the names that they're given. Remember, the rules is that you've got a 3 wave, you've got a 3 wave, and you've got a 5 wave on wave C. So that is an expanded flat. And the last one that is not very common in the chart is what we call a contracting flat. I call it a contracting flat. I'll show you just now. All right. So it's the same thing always happens again. You've got 5, right? So let's say this is your impulse. You're gonna get your A, and then you're gonna get your B retracing. This one also breaks the top of this wave 5, but this C does not break the end of wave A. So the rules of the flat will still always be 3 waves. Can you see? 1, 2, 3, 1, 2, 3, and then it will always be 1, 2, 3, 4, 5. Okay, but it does not break. And there's reasons why these patterns behave the way they do. Okay, so I do not necessarily have the time to go into that to the detail of why this one expands up and down, why this one expands and does not break the bottom. Maybe next time we'll share that. So those are the 4 types of corrections that I wanted to share with you guys. Right, so I think you've had a bit of a lesson today, but then now I want us to go to the market. So remember all these patterns that I've shown you. Remember all these patterns that I've shown you. Now when we go into the charts. So let's look at this chart that we made so much money on, the US dollar CAD pair. Let's start with US dollar CAD. Loading US dollar CAD. And just show you those structures that I was talking about just now. And show you how easy to trade Elliott wave. All right, as I always do, what do we need to do? We need to identify the impulse. Just want to get the drawing there. We need to identify the impulse. Can you see the impulse? We got this impulse. And this power impulse, we got it in May of 2016. That was last year impulse. That's when this impulse ended. So look what happens after this impulse, after we got this impulse. We got something like this. And now after I've shared with you those corrections, you're gonna tell me which one this is. Maybe let me use a different color so we can identify that we are now in correction mode. We have had the impulse, now we are in correction. If you remember the patterns that I've just shared with you. Which one is this? It only just breaks. Okay, this will I've labeled it a WXY, but I was using ABC letters that size. So this will be your ABC if we were looking at it the way I was explaining to you. You see this one just breaks, it just breaks this top a little bit. It does not go all the way. So, and it does not break the extreme of this wave, of the impulse. You see? So what do you call this correction? This is a regular flat that I have here. Okay? If you've read your Elliott wave document, you will have read about the combinations of corrections. So after that, so we've had this flat, which is a regular flat. After that, we get this one. I call this one an X. Okay? If you've read your Elliott wave, you know that there's combinations of corrections. So just do this in the meantime. So we had this flat, and then we had in between a sub-correction X, which is a zigzag. This one is a zigzag. But then we've got this other one here, this one here as well. I'm gonna use it in red. I wanna show you that how we traded this pair and how accurate this method is. All right, so this was the first correction. We got our regular flat, sub-correction in between, it's an X, and then we've got a zigzag again, okay? This is what we call a double three or a triple three correction. So the first correction is this one, the second one is this one, but in between these two corrections, it's what I call a sub-correction. It's not anywhere in the books. For ease of my own reference, I call it a sub-correction. Why? Because a correction is supposed to be in the opposite direction of the trend. This is my trend. This is in the opposite direction, right? but this one is going in the same direction of the trend. So I call it a sub-correction. This one is in the opposite direction of the trend. I call it it's a normal correction, right? So, and then we've got another zigzag again, okay? And then we get another one, a third correction here. So how many corrections do I have here? 1, 2, 3. And in between these corrections, they are separated by axis all the time, axis all the time. So these corrections, this one, the first one is called a W. The sub one is an X. The second one is a Y. Third one is an X. And the fourth one is a Z. And I know after a Z correction, there's nothing else. Elliot only identified triple threes. Maximum was triple three. There's no quads or anything like that. It's either a double, it's either a single or a double three. If this was a double three, this would have gone here. But this became a triple three. And when we got here, and I saw that this thing was not breaking this line, I knew that this had to do a Z. That's why I traded this here, all the way from here up to there. Okay, so first I traded this string, I got this correction, and I knew that it's only a internal WX, so I was still gonna get this wave, this trade as well. And this was making a very nice zigzag. And because I know that this, because of the rules of a zigzag that are supposed to be equal, I knew I was gonna buy at the equal leg. So this is why I bought this thing at the blue box, and I am now in over 1,300 pips in this trade. And I'm expecting this to get to this blue box here. And why am I expecting it to get to this blue box? Because here, if you look clearly, let me change the color here. If you look clearly, this is your impulse, and this whole thing has been making a correction for almost a year and a half, from January, May of 2016, up until July this year. Just over a year, it has been in a correction, and we've been waiting for this trade. But while we wait for the trade, we still get these types of trades as well. So now we took it here, and we're gonna ride it all the way. Why am I riding it all the way? Because here, look, I've got a zigzag. So I still have a couple of pips that I'm expecting on this pair. So this is why I'm saying don't focus so much on the labelings, WXYs, the 1, 2, 3, 4, 5s. Identify the patterns. Identify the patterns, and they must comply to the rules as we've identified. If this one is not, if this one had broken here, we would have said it's an expanded flag, but we identified. So that's the important thing, identifying these patterns. So if you are not able to identify the patterns, you can't trade Elliott waves. Okay, so that's where we are with this pair. I hope everything is clear, makes sense to you guys. I don't see anything on the chat box. It means there are no questions on this one, so I'm going to carry on. So basically here, I don't really see any trade except that this, I mean, you cannot get into this trade now, only if you get something like, if you get something like a correction, if you get something like a deep correction, then you can sell all the way down there. Okay, because you can see there's a strong impulse there. But any correction or any pullback, and I am expecting that we may start to get this this pullback. And if we do get it, then that will be a trade that you can take with a stop loss over there. Okay, so I hope that makes sense to you guys. I'm gonna move on to the next chart. So for now here, I don't see any trade, and this is the daily chart that I'm looking at. So maybe I can just quickly go down to the 4-hour chart. Let's see to the 4-hour chart and see what is happening there. So I didn't discuss with you guys an ending diagonal, but I hope you've read your theory and you know how an ending diagonal works. And this is something that looks like it's transpiring there. Look like we're getting some kind of an ending diagonal there if I'm looking on the 4-hour chart. So if this breaks to the upside, that may be a short trade here. But as I said, this is the pullbacks that the pullback that I'm talking about. So you can get this short trade here. I don't know how far yet. We'll see how it goes when it breaks. But I won't be looking to buy this here. I'm just gonna let my trade run, or maybe just take half of the profits while it retraces. So this could be the trade that we get in the next week, because I see there's some dollar strength transpiring on the charts. So let's say I'm probably going to be expecting this. I'm going to do a detailed Elliott wave labeling on this and see if we are ready to bounce. So that is the trend that you should be looking at here. A break of this ending diagonal. That is the 4-hour chart. Okay, but that is only a pullback. That is US dollar CAD. So Euro USD. So I always get a lot of questions such as, where does the Elliott wave count start? Which wave do you start on? How do you identify the start of the wave? So, and I always say that there is no start, it's a cycle. You just need to know in which position of a cycle the market is trending. So let me clear out the mess on this chart here. I'll quickly clear the mess here. Go to the higher time frame and show you how you can understand and what to look at when you do the labeling of the charts. So basically, when you label your chart, your whole chart must be labeled from the highest time frame to the lowest time frame. So this is the whole chart as far as data is available from 1994 up until today. Somebody has just unmuted the chart. Let me just sort them out. If I can mute them. Please just check your mics. If your mic is unmuted, just mute it. Okay, it's Mavutela with the mic on. I'm going to mute you just now. All right, done. Okay, let's carry on. Just want to show you, how do you label a clean chart? Because that is what everybody has a problem with. Here's a clean chart. What do we see there? How can we label this? We don't have any data going there. But I can see that here looked like we had a correction. We looked like we were having some kind of a zigzag there. Okay? And then after that, it looked like we had something like a zigzag again here. This could be my impulse, right? So I can see that I've got an impulse. Can you see that this is the weekly chart? This is the weekly chart. This is all the data that is available on the internet. Guys, please mute your mics. Keep mute your mics. Vutela, you keep unmuting yourself. Vutela, please don't unmute your mic, please. Okay. All right, you're giving other people feedback when you unmute yourself. Let's just see if there's anybody who's still unmuted. Everybody is muted. All right, this is Euro US dollar. So how do we label this? So this is my impulse that I've got. I've got the impulse. What happens after an impulse? After an impulse is a correction. So I had the impulse. This whole thing is a correction here. But what kind of correction is that? Do you see here? Okay, we had the impulse. Okay, after the impulse, I get this. What kind of pattern is this? This is the first pattern that I discussed on the flat. This is a regular flat. It does not break the top. It breaks the A slightly. That's the first pattern. After that, I get another one. I see this one. It's a zigzag. Okay? After the zigzag, I'm getting another pattern. Which one is this? Looks like a zigzag as well. Okay, so what am I going to label this as? Remember, this is the weekly chart. Weekly chart. And because it's not a simple ABC, I use AWXY. So this is my W. My W is my whole flat correction. My X is my sub-correction because it's in the opposite direction of the trend. And my zigzag, I call it a Y. Okay? Do you see where the labeling starts? And once you get the weekly wave count, guys, you are set for years and years on the same chart. You're gonna know each and every movement it's gonna take, where it's gonna turn, where it's gonna retrace, where. Okay, guys, sorry about that. I'm back. So as I was saying, I already have this. All right, so then this is my WXY, my external one. So this one can be also a WXY impulse. So most people will want to label this 1, 2, 3, 4, 5. But I've got my reasons why I do not label it with the 1, 2, 3, 4, 5. There are rules for that. So I've labeled my chart XY and my correction is getting XY, and it's the same degree. But if you can look here, let's get the annotation again. If you look here, this was the main one, W. There is a lower degree than that. Now I'm taking a bit of time here. Next chart, the next coming charts, I'm not going to be doing this. I'm just showing how you label a chart, a naked chart. Because that's what everybody has a problem with. You just want to go to the 4-hour chart and just start labeling a sheet. That's not how it works. Somebody has unmuted themselves again. Let me check who it is. I think it's new people coming on. Somebody has raised their hand. Taki, let me see if you want to say something. Taki? Say something.
No.
You can say something. Okay, I see Taki has raised their hand. I thought maybe there was a problem. Okay, looks like there is no problem. All right, so we carry on labeling this lower degree now. But this one is in lower degree. I'm not going to label it the same color. I'm going to label it. If you've read your degrees on the Elliot wave, you will know what this means. So you can see that I've got this W in blue, which is this whole regular correction. And then I have Yolanda, you want to say something?
No, I didn't want to say something. It's just that I couldn't hear you for a while, so I just wanted to ask what's happening.
Okay, Yolanda.
Thanks.
Let me try to connect again. Can you still see my screen? Because it looks like it's gone from my site.
There is a small one that I can see right now.
Okay, all right.
Like a few. I think something is happening with your connection.
Okay, now I'm connecting up. The screen is coming up now. Thanks, Yolanda.
Okay, cool. Thanks.
Okay, guys, we're back on. Just want to mute people that are not muted. I see Rian is not muted. I've just done that. All right. Let's try again. Now, I want to show you why I've just labeled the chart the way I have with this 2 degrees. I'm not going to go. This thing can go degrees lower, infinite degree, as far as the minute chart. Obviously, with the naked eye, you cannot see this. These patterns carry on like that. These degrees repeat themselves. These degrees repeat themselves in fractals. All right, so let's make this clear for those that do not understand what I've just done here. Just make it thick. Remember my impulse. Remember my impulse. Okay. Actually, I should do this in blue so you can see the corrections in blue because I'm in the blue degree now, right? Let's do that in the blue. That is my impulse. I'm connecting up the blue now. So this is AW. You see my blue degree. This is my blue degree that I'm connecting up here. Connected the blue degree, right? So now tell me, do you see another pattern here? And tell me which one it is. This one does not break the top. It just breaks the end of way slightly. This is a nice, perfect running flat that complies to the rules. And we know that a running flat retraces at least 90% to 100%, but never breaks this. So this is a very clear running flat that you have there. Right, let's go a degree lower to illustrate what I'm trying to say here. Okay, so a degree lower, we're going from blue to the yellow degree that I've just labeled. So this was my first correction. Remember, I said this was my first running flat. It does not break this top, right? But it breaks this one slightly. So this is the lower degree. See the lower degree. And then this is the correction underneath here. But here, I've got another correction, but this one is going in the opposite direction of the trend. This is the one that I like to call a sub-correction. See my sub-correction. After my sub-correction, I get another correction. Do you see how many corrections I have here now? I've got 1, I've got 2, I've got 3 yellows. So this is why these 3 corrections that I have, I've labeled the first correction W, sub-correction X, and the third one a zigzag. This is how you start the labeling. So now we've labeled this into the weekly chart. The only thing that we need to do is just to go degrees lower until we get a point where we can actually take a trade without putting a big stop loss. Okay, so now I'm gonna go lower. When I go lower, I'm gonna be focusing here from this area now, from this Y, this yellow Y and this blue Y, to see where we are with the Euro US dollar. Okay, let's clear everything. Let's go now to the daily chart. Guys, you don't have to switch on your videos. You're just wasting your data with videos. You can switch off, you can disable your videos. Tibato, you can disable your video. All right, so you saw where I was with Euro US dollar. So I said I'm going to be coming to this area here. Now I've gone a degree lower. I'll get my drawing tool again. Same thing. All right, so after that impulse that you saw, this was that last zigzag that ended here. So it looked like that zigzag was the end. And then I see something else here now that's doing something like this. Which connection is this? Which connection is that? I'm sure all of you have answered yourselves. It's a flat connection, regular flat, does not break the extreme of the impulse. Actually, this one is a contracting. Can you see? This one is a contracting because it does not break. This would have been a regular if you had broken this, but now it does not break. You see that? So this one is a contracting flat. Right, so we've got a contracting flat there. So this is how you trade. So you've got a contracting flat there. And if you see here, you've got another flat, which is a zigzag. All right, so now, let's do this clearly. I've shown you this contracting flat. And then we've got this connection again here. All right, so now we've got this impulse. Okay, we've got a flat that I could call W. I could call this X, right? So now here it looks like we are on an impulse up. The only thing that I'm waiting here for is for this to break to the downside. And if it does break to the downside, this will probably be a W and an X in the same degree, and then we go up. Because Euro US dollar is already looks like it's already on an uptrend.
Oh, hold on.
Hello, guys. Okay, I see. I was unmuted. I was muted for some time. Right, but basically, what I was saying here is that I'm expecting this to retrace at some point. And then if it does retrace, I'm going to be trading the break of this and get this trade. I'm not in the euro US dollar trade yet. So if I do get this, I'll be taking this trade. Okay, I hope that's clear for everybody. That's on the daily. You can go down to the 4-hourly chart to see what's going on. To see if we've got any specific pattern that is happening here. We could be having something like an ending diagonal there. Ending diagonal, you can go and read what an ending diagonal is on the Elliot wave book. All right, so we should get a strong diagonal here to signal a reversal. Just excuse me 2 seconds. I'm going to mute myself for 2 seconds. I'm not going away. Okay, guys, I'm just sorting out my mic here. Apologies for that. Let's carry on. All right, so two things need to happen for us to take a short trade on euro US dollar short term. Remember, this is short term. Whatever happens. In fact, it was better if we just leave this and let it retrace. And let it retrace. We could retrace up to this area, that retracement that I'm looking for, and that could be our X. Our X can really be here. But after that retracement, the market will tell us what we're looking for. Okay. Right. I hope that is clear. So that is euro US dollar. It is still on a very strong uptrend. We don't just sell for the sake of selling. We need to get confirmations. All right. So I'm going to go to the next chart. Let me just mute the. Simoniso has raised the hand. Okay, guys. I hope you're raising a hand because there's a serious issue. Otherwise, you just disturbing us if you're raising a hand and you don't say something. Simoniso, say something. Simoniso Bobzin, say something. You've raised a hand. Yeah. What's the problem? Okay, he's not saying anything. All right, let's carry on with the next chart. That was euro US dollar chart. If you can see your mic that is not muted, please mute it. Right, the next chart that I'm going to look at is New Zealand US dollar. Okay, my internet is loading a bit slow now. Okay, we're back on now. All right, I'm going to clear up all this mess, don't worry. Clear all that. Just clearing all this mess so that we can have a clean chart. Okay, guys, it's always important to analyze the chart from the higher time frame going all the way down. That way you know the exact direction of the main trend so that you do not trade against the trend. Okay, so what am I looking at here with Euro New Zealand? I'm not going to go into the details of how I come up with the labelings here. So I'm just going to go straight to where we are at the moment. Okay, so we've got this impulse here. We had the impulse. I'm going to take it off. This was just me doing my analysis. We had the impulse. And after the impulse, I've got this 1, 2, 3, 4, 5. Do you see now that I've labeled this 1, 2, 3, 4, 5? I do not just label 1, 2, 3, 4, 5 because it's 5 swings. I label it 1, 2, 3, 4, 5 because it complies to the rules of a 1, 2, 3, 4, 5 impulse or actionary wave. So this one is not just a normal impulse. This one is a leading diagonal. Go read a leading diagonal on your Elliot wave book and see what the rules are for a leading diagonal. You only find it in wave A and in wave 5. So this is what I have. I've got a leading diagonal in wave A. I actually thought this was going to go down here. So I even posted a trade on Facebook saying that this must come down. But it went against me, hit my stop. I think I've lost 3 trades on this one because I was expecting this one. I took it twice, 3 times, and then it hit the stop. But that's okay because when you lose a trade, you should be losing only 1%, 2% of your account. And it should not even bother you that a trade has hit a stop because the ones that you win, they must be winning big. That's what risk management is all about. And risk management is more important than this chart that we're looking at here. Even a bad trader can make money using proper risk management. And a good trader without risk management may not be profitable. All right, so let me show you what I'm looking at here. I think it's better, it's always good to show the strings with the drawing tool here. So basically, this ending diagonal is regarded, it's not a correction. It's one of the actionary, it's regarded as an actionary wave, right? As you know that wave A, the rules are that it should be labeled as 1, 2, 3, 4, 5, right? Drawing crazy here. Drawing crazy. Okay, let's draw properly like we went to school. Okay. That's the rules of an ending diagonal, of a leading diagonal. So the leading diagonal has got a 1, 2, 3, 4, 5 subdivisions. And the subdivisions of a wave 3 are 3. And the subdivisions of a wave 5 are 3 as well. So that's what we have. We've got a wave A here. This should have made this what made this thing here. What correction is this? The running flat. Do you see this? The reason why I said you need to identify the patterns. We had a running flat. I actually thought this was coming up here and it's going to give me a sub correction, and then I was going to get another correction here. But I was wrong, and I see exactly why I was wrong. Because this has made a see on the higher degree we've got ABC, a clear ABC. Let's look at the higher degree. Let's clear the drawings. I think that's what I should have. Okay, we're back on. Slight break. I don't know why this keeps happening. I don't know why Tibato is always unmuted. Okay, let's get the drawing tool out again. So look at this. Proper drawing. I'm just getting a proper drawing here. It keeps changing my drawing format. So look at this. I had the impulse. After the impulse, I'm getting the ABC. Okay, look at this. I'm connecting my ABC. Okay, I do not know which wave this is going to be, which type of correction is going to be, but all I know is that a C correction is actionary and it's got 5 subdivisions and it's strong, right? So this is why, okay, this trade has already left us now. So what are we going to do now? We're going to wait for this to give us a sort of a retracement so that we can enter, okay? So we can get a retracement here and then we go up. So that is the higher correction. So what is happening on the lower degree? I'm going to change it to the lower degree. Remember the other ones it was just zigzags, and it's not always just zigzags. The lower correction depends which pattern you're trading. Here we're trading a leading diagonal, and the leading diagonal we're getting it on the wave A, and then this is our B wave, which is always in threes. So now this Y, as you've seen, all the Ys are usually not zigzags, but they're usually actionary waves. They're actionary waves. So I'm expecting something like this. So we could be getting a pullback on the New Zealand. So okay, I keep getting weeded out. I don't know why. Okay, so what I was saying here, Euro New Zealand, what we're gonna wait for is a pullback. Go to the trend line and then we carry on. At some point, we're gonna get a deeper pullback. At some point, we're gonna get a deeper pullback and then we carry on to complete this. This is the, we just get a drawing tool. I think it's the one that goes clearly. So this is our main wave that we'll be looking for. So we're gonna be looking for this deeper correction here. So if we do get this deeper correction, that's where we're gonna be selling, buying, carry on to finish to complete the wave. All right. Go to the next chart. All right, let's look, check which chart we can go to now. Audi New Zealand has got it's very interesting. It's got a very clear structure. Let me go to the higher time frame, to the daily maybe. Show you what I'm looking at on this one. Let's go weekly. I've been waiting for this trade for some time now, and I actually thought it left me, but it looks like it didn't. You've seen most of the trades that trades that I take, they are long-term trades with the. But when I say long-term, I'm talking about 2 weeks, 3 weeks, a week, sometimes 3 days if you've got a impulse well-defined, because impulses are faster than corrections. So look at this structure here. This is a textbook setup. Let me mute the person that is not. Give us a please. Textbook setup. Give me a second. So this is the one for beginners. When you start learning Elliot wave, this is what you're gonna find. This is what you're gonna find. 1, 2, 3, 4, 5. This is a very clear 1, 2, 3, 4, 5. And it complies with all the rules of an impulse. This one is clearly defined. And then you get this with A. Let me label the correction with a different color. Let's use a different color. Let's use a red for correction. So this is what we have here. We've got a wave A. Okay. And then we've got a larger wave B here. All right, so under wave A, B, and C, this is what I'm looking at here. I'm going to change the color again. Use the blue this time. I've got this pattern here. And then I've got this pattern here. It's up. So I'm expecting that this is going to do this. And then we come down here. If it does come here, I am going to be buying out in New Zealand for a very, very long time. Change the color again. I'm going to be anticipating this big, big trade here. So if you see here, it will be around, I don't think it will go to the 1, but it will be very close to this area. If we do get here around the 1.02 area, I'm going to be buying this for over 1,300 pips. So we already got a retracement. This is the weekly chart. I'm going to come down here. So you've seen that I've got an A. This is the larger degree A, B, C here. Okay. So this is the trend that I'll be looking at. And remember, this is the weekly chart. You can hold this for a long, long time. And if it is an impulse, it may not even be that long. Maybe 2 weeks, 3 weeks, 4 weeks to get this so many pips. Okay. Clear all drawings. So you've seen this pattern. You've got this pattern. So now, this one has already done this here. Okay, we had this pattern here. So this one, this is the trade that I thought had left me. I thought it was gone. And I was going to wait for the correction. But it looks like it's not gone yet. Looks like we're going to get something like that. Let me go down a time frame lower to the daily. Show you what's happening now. We had a pullback. We had a big candle. We had a big candle last week, Friday. You see here. So this is the big candle that we had, and this is a daily candle. So which confirms to me that this will possibly do this now. Okay? And if it does get there, and maybe this is equals to, maybe this is equals to this, and we get somewhere around here, I'm going to be buying this for a very long time. So that is the trend that I'm looking at on Audi New Zealand. This is a very clear textbook structure. So that's what I'm looking at on this chart. We're gonna get so many pips here. Let me just count from here. Just count the number of pips that we could get. But you see, this requires patience. This could happen maybe end of July, beginning August. But depending on the impulse, it can be faster. But it's worth waiting for. I mean, if we're talking how many pips here? We're talking 1,400 pips. So you can just calculate which lot size you're gonna use depending on your account. Okay, so this is going to be a very good trade. But for now, it doesn't mean that while we're waiting, we don't trade. So let me go down to the 4-hour chart and show you what we can have as a trade here. This is that impulse. This is that daily. This is that daily candle that I was talking about. We had this reversal here on Friday. So any correction that does this, even if it's on a 1 hour chart, you can sell it all the way up until the one area. So basically at a point where the Audi and the New Zealand are exactly the same value. So we'll be looking for a correction. We'll be looking for a correction to enter a short here. All right. So any correction should be sold. So to look for this, you can go to the lower time frame. You can go to the 1 hour chart. If you get something like this on the 1 hour chart, you can sell it. So go to the 1 hour chart. Obviously, there's nothing now. It's just an impulse. It just went down. Just went down. Okay. You can see here, it was almost had a correction, but it was too small. You almost had this small flag here. It was a bit too small, but it was quite accurate. It was very nice entry point, but I was not ready to sell this thing without proper confirmation. So Audi New Zealand in the next week, from tomorrow, we should be expecting that it will go down. If you want, you can take this trade when the market opens with a stop loss just above this flag. That's what I'll probably do. And then we're going to be selling it all the way down to that entry point that we discussed. Okay. Which other one can we look at now? Oil. Yes, let's look at oil. Somebody asked me to look at oil. This is probably going to be the last chart that I look at, and then I'm going to take one that you guys request. Let's look at oil. So as always, it's always better to go higher time frame. Let's look at oil. Oil also is very nicely defined. Got a very clear wave count and structures. All right, so oil. Here I've got a 1, I've got a 2, I've got a 3, and I'm anticipating that I'm going to have a 4th wave here, and then a 5th wave. You see how clear this one is. We clear the drawings, just show you the labeling that I have on there. Let's look at the trade that we're looking at with oil. So we've got a very clear 1, 2, 3, 4 that I'm anticipating. And then we're going to drop again with oil. Okay, let's go down to the 4-hour chart. Just remember, when I go to the 4-hour chart, I'm going to be here looking at this trade here. So I'm going to be looking at, so this is my W, this is my X, and this is my Y. So I'm going to be looking for this trade. So I'm just going to go down lower, but it has not happened yet. Let's clear all this mess. Yeah. So all this mess that I have is just indicating the patterns, the type of patterns that we have in the, if we were to label this in detail. If we were to label this in detail. Let's clean it up. Let's clean up all these errors. Clean up. We are now looking at the 4-hourly chart. So what am I anticipating with oil? Okay, this is the 4-hour chart here. I'm not going to go to the higher time frame to show you how we got here and why I'm looking at it the way I'm looking at it. You saw how we look from the high to the low. All right, so we had the impulse. So here, let me just put in a trend line. This is the 4-hour chart, remember? So 2 things can happen here. This one also had a big reversal candle on Friday. You can see here, it reversed. So oil should carry on with this downtrend all the way up to this trend line. So what could possibly happen, it can either break it or carry on. If we get to the trend line, we're going to carry on this uptrend here. So just watch oil, see what happens around the trend line. If it breaks the trend line and makes a correction on the lower time frame, we're going to be selling it all the way to this trend line here. Okay, that is oil. So I'm going to go to the chart box. If anybody has got a chart that they would like us to look at, you can just type it now. Which other chart do you want us to look at? GBP JPY, we're still on a sell. Let's just look at GBP JPY. Go to GBP JPY. Excuse me, guys. My kids are making noise. Let me just get them to keep quiet. Just 2 seconds. I'll be back with you now. Okay, guys, sorry about that. So let's look at GBP JPY. We did this one last week, actually. So this is the 4-hour chart. We had a clear 1, 2, 3, 4, 5. So obviously after a 1, 2, 3, 4, 5, you get an ABC here. Just label it for you. Proper degree. So trading view is very nice. It's better than MT4 in terms of its user friendliness, because everything is pre-populated, so it's very quick to label these charts. Right, so we've got this ABC. I believe that this one looks like an ending diagonal. This C looks like an ending diagonal. So we could be getting a bounce here soon. So I don't know if it's going to make a sub correction or if this is the end of this correction, if it's gonna carry on. But on the bigger picture, looking at the bigger picture on this chart, can we get the drawing? I'm looking at this big zigzag here to get all the way here. So as you know, the market does not move in a straight line. So if we break here, we could be completing the move to the blue box here. So right now, I'm on a short on pound JPY, but if it breaks here, let me do it clearly. And just zoom in where we are, looking at the 4-hour chart. So this looks like an ending diagonal. So ending diagonal, you get it on a C wave or a fifth wave. And here you can see this is a fifth wave. I mean, this is a C wave, and we're getting an ending diagonal. Yeah, 1, 2, 3. This may not be over yet. What it could do first is something like this. Maybe another correction here. Go read the ending diagonal. I'll label it properly to see if it is completed. So then this is what I'm anticipating. It could go, or this. Yeah, so it could go from here. So we're just gonna see what happens. But if it breaks this trend line, I'm going to be taking off my sell and I'm going to be buying GBP JPY, targeting the blue box. And when we get to the blue box is where my equal legs are going to be. The equal legs of this bigger trend is going to be. So this could be coming up here. Okay, and if it does that, then the blue box I'll be looking to sell for many, many pips again. Okay, so that's what this one looks like. Right, another one is somebody has requested GU, pound US dollar. And we look for pound US dollar. I don't know how much time we've ran so far, but this is so pound US dollar, similar to this one, is actually going down nicely and correctively on the 4-hour chart. I'm on the 4-hour chart here. So possibly this will come down to this trend line. If it breaks this flag, we are going to be in strength. So this is complying to the strength that we're expecting in the pound JPY that we've just explained as well. Okay. So pound, we're expecting upside. So a break of this flag here should be a trade. All the way up to the trend line. Don't know if it's going to go that far. But the first target will be about 300 pips on the pound. Actually 300 pips. There's a reason why I'm expecting it to go all the way up there. If it breaks here, it's a good trade. Mark your charts and see if it breaks this flag. Or what could happen is this. Okay, let me get it drawn through. This correction can be a little bit deeper because we already have this zigzag. So this whole correction is correcting this part. And then this will go like this. So this one here can actually be a W, X, Y. Forget about this white labeling that I have here. Okay, let me show you why I'm looking at it like that. All right, I'm going to clear the mess. I'm going to clear all this mess. Show you why we're looking at it the way we're looking at it. Can you see there's some kind of similarity between this chart and the GBP JPY that we just looked at? GBP JPY, GBP JPY, we had a 1, 2, 3, 4, 5 here, A, B, C. What did I say? I said I'm anticipating that it will break. I'm talking about GBP JPY, right? But I'm looking at this one. But there's similarities here. But this one has already broken this ending diagonal. Just go to GBP JPY so you can see the similarities. And these correlations are very important on this pairs because you could find that a similar pair with the same correlation has already played a move that another pair is still to move to play. You see, GBP JPY is lagging. Pound US dollar has already broken here. It has already broken. So GBP US dollar is yet to break. You see, GBP US dollar is already broken. GBP JPY has not broken yet. So it could be following the same move. Ending diagonal and the same ending diagonal on GBP JPY. So that's why I said GBP JPY. I'm expecting that it should have a move up. So it looks like the pound is in strength in the coming week. Okay, let me check the chat box, see if there's another request. Any other chart that anybody wants to look at? So US dollar JPY, you can just look at GBP JPY. US dollar JPY. Okay, somebody has asked for CAD JPY. I'm going to do that one. So let's look at US dollar JPY. We are in the downtrend in what looks like a ending diagonal. Go down to the lower time frame. I explained this this US dollar JPY chart on last week's webinar. So if you want a detailed analysis on this one and what we're doing on this pair, just go to that video. It has played out exactly as we've analyzed it last week. Get the pen out. So last week, when we were analyzing this pair, we said we're already on a downtrend here. So the only thing that you need to do is every time you get this correction, you sell it. We were here, we got this correction after we did the webinar, we got this trade. And then it went on and did this again. We got this trade. So the only thing that you keep doing on this pair, if it does this again, you're gonna sell. But I'm anticipating, because in the next week, we're gonna have some kind of a pullback with the US dollar, that we may break this to get some sort of maybe we call this a W and then an X before the prevailing move continues. So you can see these charts are correlated. They're doing exactly the same thing. So everything confirms to what we are anticipating. So what should you be looking? If you are a swing trader, you should not be looking to necessarily buy the US dollar. You should be waiting for this correction. You should be waiting for this correction to play out so that you can get this move and finish it. So you see that I always draw it as a zigzag. It's not always going to be a zigzag. It can be any correction, guys. So just don't think that everything is a zigzag. But you can get any kind of correction here. So if you do, that's an opportunity to sell. Okay, somebody asked for CAD JPY. Have a look for CAD JPY. CAD JPY. Let's look for CAD JPY. Okay, CAD JPY is an interesting one. So CAD JPY also has the same structure, similar structure as, let me get a drawing tool. Similar structure as GBP JPY. We've got a big zigzag playing out. What I'm taking long like this is me trying to get my drawing, yes. So we've got this big zigzag. This is an impulse, you can all see. Then all this here, everything that we had here was a correction. We had this correction for a whole year, almost the beginning of the beginning of the whole of 2017. We were in correction until we broke here. And I'm expecting this to go all the way to 94. So, but if you have read the Elliot wave theory, we could be getting some sort of a wave 4 here. I've already labeled 1, 2, 3. So 4 and 5 is a possibility to take us all the way to the blue box to complete this big zigzag. So CAD JPY, if you're not in a trade on this one, same thing. Wait for a pullback. Wait for the pullback. So this is the 4-hourly chart. So if you get a break of this here, you may be in the trade, but I'm anticipating that we may have a bit more correction. I'm anticipating a bit more correction here before they move up. Okay. And there's also US dollar chief. Somebody has requested US dollar chief. Okay, I think we've got 2 minutes. So this is possibly the last chart that I'm going to look at. US dollar chief. So US dollar chief is in a big weekly channel. I'm going to show you. Let me go to the weekly. You see here the week. This, I thought it was going to be a triangle, but it does not look like a triangle to me. It looks like an A wave. Okay, here's the impulse. You can see the impulse. Let me clear the mess. We had the impulse. Back. And then I'm thinking that this is what is going to happen. We're on the weekly here. Do you see how we forecast? So if I am right up to here, then I know that for the next 3 years, I know what this chart is going to do. So B wave always does like this. All right, so we are in this A. So what did I say? On A, you can get an ending diagonal. And what I have here is, looks like an ending diagonal. I can label it here while you're here. So an ending diagonal. So what I'm going to have here is wave 1, 2, always, sorry, undo. You see, you need to understand how this, you need to understand how it works, because sometimes it may not be as clean. Oh, my drawing is not going properly here. Sometimes it may not be as clean as we want it to be. Wave 2. Let's clean out here. Sometimes it's not as clean as you want it to be. You just need to think out of the box. That is 3. So we are currently down here. We are currently on this wave. We're gonna go into this. We're gonna go into the lower time frame. So the higher degree will be the A. This whole thing here will be an A wave, and I'm gonna go to possibly a B. If this is an A wave, so this is not completed yet. So let's go down into the triangle on a daily. Or rather, let me label it with not with a drawing, so I can actually give it an actual labeling. 1, 2, 3, 4, 5. Let's make it intermediate. See, you still have 16 people. You guys have stayed on. It means this is interesting for you guys. I think we've lost about 8 people since we started the webinar. Okay, so this is the last chat that we're looking at. All right, so you see how it helps to see the higher degree. Then when you go down to the lower, you understand what is happening. So this is my 3 here. So you can see this subdivides into 3. It's the rule that an ending diagonal should have 3 subdivisions. So I've got 1, 2, 3, 1, 2, 3 on this one, 1, 2, 3 on this one. So on wave 4 as well, I'm anticipating to have 1, 2, 3. Where are we now with this one? This is wave 4. We're expecting to have 3 waves. This is why I said this is what I'm anticipating here. So I'm going to get my drawing. So I'm anticipating 3 waves to complete a 4 before we go up to the 5. Okay? What did I say about the US dollar pairs in the next week? We said we're anticipating pullbacks. Can you see that this is also a pullback? And then after that, we're gonna carry on with the sell. So any US dollar strength that we're gonna get in the next week is only a pullback. So you can see all the US dollar pairs are saying exactly the same thing. So which means our analysis is on point. Okay, we're not doing something different on one pair, and we're not buying a US dollar pair. We're not buying the dollar on the one pair and selling the dollar on the other pair. Everything confirms. So here this also looks like an ending diagonal as well here. So we should be getting a pullback soon here. Okay, I hope that makes sense to you. The correlations are very important, guys. Let me go one last thing. I don't think I'll be going through. Okay. Okay, well, somebody's asking what the name of the book is. Just Google Elliot Wave. There's a whole lot of information on the internet. But the book that I have that I give to my students is one that was done by a guy called Robert Pechner. I don't even know if I'm pronouncing it properly. But almost every site on the internet has got the Elliot wave theory. But it's very brief. You need to read this like you studying for an exam if you want to understand it. After all, this is worth lots and lots of money, so it is worth your time. Okay, guys, one more question and then we close the webinar. Anybody has any question? Once again, apologies for the feed breaks. I don't know why we keep having that. Maybe a slow internet connection. Hopefully we sort that out in the next webinar, and I hope you enjoyed it. So I see the chat box is empty, which means nobody else has any more questions. All right. Do you consider fundamentals? I usually trade swing, and I believe that the market is moved by day-to-day market data. So if I'm on a swing trade, I just let it run, whether we've got fundamentals or not. Or rather, if my trade is running, I'll just put it to break even and let it run. So I believe fundamentals are incorporated into the chart. You know? So I do consider the fundamentals. Thanks, David. Thanks, Sansa. Thanks, everybody, for joining and staying on till the end. I hope you learned something today. All right, if anybody is interested in the course, we'll be in Pretoria on the 5th to the 6th of August. Send me a direct message on Telegram. Let me just stop the recording before so we can